Hey there, awesome accounting student, Mark Franke here. This video is for Chapter 2, Accounting 100, and I'm going to use Problem 2-4B to illustrate how to prepare a set of financial statements. So, what they've given us in the book is here in front of you, and I have used the same format that I used for Problem 2-2B in my other video, so that hopefully you're familiar with how this works. If not, I would stop here and go back and do 2-2B first. At any rate, we now have a balanced out schedule that shows assets on the left, liabilities and owner's equity on the right, and now we're going to prepare a set of financial statements. Financial statements that we'll be preparing, there are three: the income statement, the statement of owner's equity, and the balance sheet. These are the three basic financial statements that we'll be using for the rest of your life. Because if you are General Motors or Apple Computers or whoever, you're going to prepare these same three financial statements. And they have to be prepared in that order: income statement, statement of owner's equity, and then the balance sheet, because they link together. And I'll show you how that works. So I'm going to use these numbers to prepare these three financial statements. Okay, so I've got a separate tab, and you can just do this on paper as we go along. And I've just kind of set up a format, but let's focus on the income statement first. Okay, so as we always do, we want name and the problem number at the top of every page. And this is Catherine Proctor, attorney at law. And this is an income statement, and it's for the month ended August 31, 2020. This, by the way, problem 2-4B is in your book on page 50 and 51. So, income statement is always first, and what is it? It's revenue minus expenses. And our revenue from our schedule is $10,800. I'm just going to link it, and I'm going to put a $sign on it. And then we have three expenses in this problem. We could have more, but right now we just have three. It's utilities expense, salaries expense, and telephone expense. And I'm just gonna put those in: 600, 5,400 for salaries, and 480 for telephone expense, so that our total expenses $6,480, and when we subtract the expenses from the revenues, it's net income. Now, the way I've presented this is I'm showing the expenses as negative numbers. Typically, we would just have them as positive and then subtract, but either way, it'll work just fine. But net income is $4,320, subtracting the expenses from the revenues. I'm doing this as negative just to be consistent with the way that I prepared the transaction sheet, this sheet. I always show the expenses as negative over here, and so I'm doing that on the financials. But however you want to do it, and probably connect, and your book is going to show them as positive, and then they subtract, but you get the idea. Okay, so that's first. Then we can prepare a statement of owner's equity. We're going to do that down below here. We have the same company name, of course, Catherine Proctor, attorney at law, and this is called a statement of owner's equity. And it's the same period for the month ended August 31st. So what this statement does is it connects the income statement to the balance sheet by taking the beginning capital and then showing any changes that have been made to the capital account as a result of the operations for the month. So if we start with K. Proctor, capital, beginning, and that was $23,200. And where that comes from is right here at the top of the capital column on our transactions. That was the beginning balance in the capital account. But during the month, we had some net income that we calculated up above. That's why we have to do the income statement first, so that we know what that number is. And then we also, the owner took out a drawing. And that's on the transaction list right here. It's transaction G. And that's a negative because when the owner takes money out, that has a negative effect on equity. So now K. Proctor, capital, ending. This is at the end of the month. If I total this up, I get ending capital of $26,320. $26,320. So now I need that number to plug into the balance sheet over here, and we'll get to that. But let's prepare the balance sheet now. Catherine Proctor, balance sheet. Oops. And the balance sheet doesn't cover a period of time. The balance sheet is as of a moment in time. At midnight on August 31st, here is the balances in the assets. And these are going to come from the ending balances on our transaction schedule. We have cash, accounts receivable, okay, Mark. Accounts receivable is money that customers owe us. We have some supplies, and we have some equipment. So if I go over to the transaction schedule, I'm just going to pick up the totals from each one of these, and I know it's $26,920 is the total. So I've got $49.20 in cash, $6,600 in accounts receivable, $5,400 in supplies, and $10,000 in equipment. So my total assets, when I total it up, is $26,920. And you'll notice we have a dollar sign at the top and a dollar sign at the bottom. We have over here at the income statement, dollar sign top and bottom. Over here on the statement of owner's equity, dollar sign top and bottom. And when we finish a schedule, in other words, if we're done, we have the total that we need, we put a double line underneath because that's like railroad tracks. And that's a normal accounting convention. So, liabilities, we have one, accounts payable. And it's $600. That comes from the accounts payable column in our transactions schedule that's over here. And that's the only liability that we have. Then we have our owner's equity. And that's going to be Kay Proctor. She's the owner. And that number is coming right from our statement of owner's equity. That's why we prepared it. And that's why we have to do that one second and the balance sheet last. So total liabilities and equity is the accounts payable plus the capital, 26,920. We have a dollar sign top and bottom, double lines underneath, and we are in balance. Well, we knew that before because our transactions balanced on our transaction sheet. But this is a standard set of financial statements. You need to practice this. This is really, really important stuff. Okay, so that's all for now. Thanks for watching. I'll see you again soon. Bye-bye.